Hi there traders, welcome to Elite Currency. My name is Chris and it's time for a new euro dollar and pound dollar video. We have 2 days left in July. Wednesday we start a new month, so we can take a look on Thursday video, take a look at the monthly candles that are available for July. But in the meantime, of course, let's take a look what we expect this week. Alright, pound dollar weekly chart is still in this downtrend channel. However, there are, I think, signals and signs that indicate that a retracement or reversal back to the upside is likely. I think that for the moment, a wave 1 is finished and price will make a wave 2 back to these fibs like the 50, 61.8 fib. But let's take a look at the daily, why I think that. So we have, first of all, of course, the weekly wick, by the way, at the bottom of the candle, and we have more wicks here that we see. That's point 1. Point 2 is that we see a upside bullish momentum go back to the 21 EMA. Now we've had that before, right? We had it here and we had it here, but this time I think there's pretty decent divergence between these bottoms. So I think that this time it could be perhaps different, all right? And on top of that, we might have a potential head and shoulders level right here. Left shoulder, head, and we do that like this. Left shoulder with the red circle, head with the blue circle, and green circle could be the right shoulder. Of course, the break of the channel is the confirmation of the bigger reversal or retracement to the upside. Let's take a look at the 4-hour chart. And here we can see that price has completed 5 waves to the upside in my view. Wave 1, 2, 3, 4, 5. All right, 1, 2, 3, 4, 5. Now that's a bit different than last time because last time was a clear A, B, C in my view. And let's see, if we go back a little bit further, this was also pretty corrective and choppy here, as you can see. So that did not look like a clear 5-wave pattern. Now, you know, this is of course trading, nothing is guaranteed, but it looks like a 5-wave to me. So I'm leaning towards a wave here, that this is a wave B, and up it goes for a wave C. So within wave B, we would expect a B, C. This could be A, this fall, this momentum is A. We expect a B up, and I would expect a C down. Now that wave B, of the wave B, the red B, could go, for instance, to this level and create a head and shoulders pattern. All right, so it can go up like that, bounce back down, and retest the other head and shoulders pattern, the inverted head and shoulders pattern from here. All right, so let's put a level like that. There we go. So we can see up, hit the head and shoulders pattern, down, hit the inverted head and shoulders pattern, and then move up again. And then hopefully, or not hopefully, but probably break that downtrend channel, the resistance of the downtrend channel. I say hopefully because this is what I'm expecting. This is my analysis, and of course, not always does it play out what I expect. That's why I wait for candlestick reactions. That's why I wait for time patterns and price action and chart patterns to confirm what I'm expecting. All right. So this is always my roadmap. I'm showing you my roadmap. And then I look for trades within that roadmap. All right, and sometimes I get those trades, sometimes I don't. It depends if price confirms what I'm expecting. So when price moves up here, for instance, right, will it for sure stop here? I don't know. It could stop at a deeper fib too. It doesn't have to. It's the most likely spot because I think there's confluence. There is a 61.8 fib. There is a head and shoulders pattern, and maybe there will be pivot points. Who knows, right? But could it go up to the 78.6 fib and bounce from there? Surely it could. The invalidation level is this top. Because if it breaks above this top, it is not a bearish ABC anymore. Not a zigzag pattern in any case. It could still be maybe some flat correction. So for a zigzag, that particular level is the invalidation level. So that's why I always work with confirmation and invalidation. And that's what all the SWOT traders know about. The invalidation level of the bullish ABC, like this, is this bottom, all right? But that said, if price is falling very quickly, right, and it makes maybe a flag like this and it falls again like this, without necessarily breaking this bottom, and then shows again a bear flag, in that case, the patterns are showing that a bullish ABC is probably unlikely, okay? But the invalidation level is all the way at this bottom. In that case, if it breaks through that, we might see more continuation to the downside towards 129, 128, 127.50. We have to see how the patterns play out. If it breaks above the downtrend channel, then we can put the fib from here. 1 second. Let me get rid of this fib and add fib from here to here. And we're looking for continuation up to the minus 272 target, minus 61.8 target, minus 100 target. All right, so price could go like this, probably in 5 waves. So we expect A, B, C, wave 1, wave 2, wave 3, wave 4, wave 5, something like that, up to 130, 134-ish area, because that's where we have a previous top that's very strong. Let's take a look. Here you can see around this level there are tops here, as you can see. So that could still be, and here too, all of these tops could still play a role. All right, let's take a look at the euro dollar. Euro dollar is in a consolidation zone, pretty nasty, long-term, lengthy range, and it's a bit difficult, pair at this moment, time frame. If we connect the dots, we do see a triangle pattern as well, and I think from this perspective, there's a good chance the price might bounce because it's at the bottom of that triangle pattern. Now, if it breaks that pattern, which I don't expect, but if it does, then specifically it would have to break through this bottom, 115.50. There's some space to 115. If it breaks 115, there's some space to 114.50, but not a lot of space. 50 pips each time it breaks. Maybe a small intraday trade, but you're running quickly into big support despite the break. Right, so it would have to really break below 114.50 with a lot of momentum, with a good daily candle, before I would become a lot more bearish on the euro dollar. Otherwise, I would still expect bounce at 114.50 and a reversal. And I expect at this moment actually a reversal. If it gets there, I don't expect that. I actually expect price to bounce off the bottom of this triangle and move up again. I think that from my perspective, it's likely that price is making an ABC correction like this, and I expect price to go up to challenge this resistance of the triangle, and maybe, just maybe, finally, eventually this week or next week, it could break that triangle and move to the upside. But difficult to time and difficult to expect because, it's been in this triangle for quite a while. So probably better, rather than trading the breakout, could be better to let it break, look for daily candle close that can close above that trend line. The close near the high indicates that the bulls are in control. Wait for a flag like this and then trade the break of that flag. All right, and that will be the way to trade it. Now, from a fractal point of view, we see that it's pretty mixed. We have red fractal here, we have green fractal, but the green fractal definitely most, the nearest. This is a bit further in time. Also, the bottom fractals, the nearest bottom fractals are indicating circles. That's indicating consolidation. And here we have green fractals. So we're leaning towards an uptrend at this moment that could start if we get a break and continue. Now, the moving averages are not that valuable because price is indicating a range. You can see that moving averages are just going wishy-washy sideways. Price is breaking above it a little bit, then moving back to the moving averages, breaking below it a bit, moving back. Look at this. Away, down, away, up, away, down, away, up. So it's always kind of returning back to those moving averages. So I wouldn't be surprised if we see a little bit of a hook back like this and then a bounce. Let's take a look at that 1 hour chart. There we go. So it probably happened, in my view, there's a chance that this is a 5 wave. It is not as clear as the 5 wave on the pound dollar, but I'm still think that it's the most likely. That could be wave A. This is probably a wave A, B, C, right? We've got an A, B, C, within the A and the B, and then we have a 5 wave here for C, and I'm expecting this to be wave 1, down for wave 2, up for wave 3. All right, now the invalidation level of the ABC zigzag, if I'm wrong, price will break through the trend line. That's not an invalidation level, but that makes the ABC less likely, and the invalidation level is this bottom, because that's where the wave A started. So a break below that would invalidate that ABC, bullish ABC. A break above these tops, all right, would make it more likely. And you can see that there's also potential for a head and shoulders, inverted head and shoulders as well. But this top, very important, a lot of resistance there. In fact, there's a lot of resistance everywhere, even at 118.40, 118, 118.50. So even if we get the break, be careful that the target is pretty close. You might get something like this, and then up, and then that's it. So be careful of that. And we'll have to see how price responds at this resistance level, whether you get a flag break or you get a close and reverse flag and continue back down again. Okay, but that's something we'll have to see when price gets up to 118.40. At this moment, euro dollar is difficult, choppy, not easy to trade. but eventually, of course, price will break out of this pattern and will start to show momentum in one of the two directions. I think that the momentum will break to the upside, whether it will break after making one more lower low at 114.50 or after it breaks the trend line like this and then flag a correction. I'm leaning towards a bigger bullish correction. But I realize that there's a lot of momentum to the downside here. The price is moving sideways, so that one more lower low would also be in the cards. So that's why it's a difficult pair to read at this moment. And I have to keep in mind that the lower low is something that is on the table too. So for the moment, leaning towards a bullish bounce back to the top of the triangle. That seems the most likely at this moment. All right, I hope that helped a little bit. Sometimes the market is difficult to read, but I think the pound dollar looks pretty clear to me. So let's see if it follows my path of least resistance. I hope that it helped. And if it did, would definitely appreciate your shares, likes, and subscribes. Thank you so much for all of those in the past as well. And more free analysis, of course, you can find at elitecurrency.com. Cheers and good trading.